Hello, everybody. Welcome back. Ed Ponsi here, your FX educator here on behalf of FX Street once again. Good to be back. Good to be here. Fantastic. Okay, sorry about that. Welcome, everybody. Sorry, my voice, you can hear my voice. I'm actually getting better, but now my voice sounds like this. So I had a little bit of a cold. No big deal, gang. All right, going through some of the numbers that have already come out earlier today. Manufacturing production in the UK, better than expected. Let's get right into it. Okay. Consumer price index it's for Greece, so we're not even going to worry about these. A couple of auctions in Spain, nothing to worry about there. Nobody in the US I know is worried about the business optimism cycle, which came out earlier today. The only thing on here really that's of any concern so far that came out is the manufacturing production figure out of the UK. A very nice manufacturing production number. Okay. And the GDP estimate came out, 0.4. And so that's it. Really just a couple of GBP numbers, a couple of Great Britain pound numbers. And what do we have coming up? We have a few things coming up from Canadian dollar, from housing starts and building permits coming up in Canada. Happy Thanksgiving to all my Canadian friends. Yesterday was Thanksgiving in Canada. And we're going to hear from some FOMC speakers. Kashkari, I believe he's with the Minneapolis Fed, will be speaking in about 2 hours. Kashkari emerging as a candidate to replace Janet Yellen at the Fed, who apparently will not be back. Okay, so now emerging as a candidate to replace Yellen is Kashkari. And that's pretty much it as far as what's happening on the sheet here. The economic data for the day ahead. So we will get to the charts. I thought this chart was interesting. This is actually a U.S. stock, Walmart, the world's biggest retailer. Uptrend, symmetrical triangle, breakout, right? But pulled back to within the triangle, borderline. That's a 3-month consolidation. Big breakout on big volume yesterday, and a buy signal from MACD yesterday. Sort of put a cherry on top, right? So you're thinking it's looking good, but it pulls back late in the day, and it's telling you, is that breakout a fake out? Walmart is competing with Amazon, right? And for global dominance of retail. It really does come down to it, the battle for the future of retail. And, while so many retailers are in trouble and going out of business in the U.S., the future is being fought online between these two giants. So Amazon's latest is they come up with this brilliant idea, right? If you want to return a product to Walmart, here's the latest. You put your app on your phone, you put the Walmart app on the phone, and you scan the product at home. And now you've created a barcode. Now when you show up at Walmart, you already have your barcode, so you don't have to wait in line. You just show up and you go through this quick scanner line at Walmart, and boom, you're done. It should take literally 30 seconds to return the product once you take it into Walmart. That's the new plan. And Amazon can't compete with it Why? Because Amazon doesn't have physical locations. So they're trying to compete with it. How? Well, Amazon is going to try to compete by having returns at these department stores in the U.S. called Kohl's. But they're starting out just in Chicago and Los Angeles. Meanwhile, there are 4,700 Walmart stores in the U.S. Now, why is this a huge win for Walmart? Because 70% of the people who return items to the store buy something else. Okay, this was the result of a study taken last year. So when those Amazon customers, they can't return the items to an Amazon store and buy something else. They have to either send it back by the mail, or they have to return it to another store, like a Kohl's department store, and then they're going to buy something at Kohl's. But meanwhile, Walmart has created something that's going to send all their customers back to Walmart, and 70% of those customers are going to buy more stuff at Walmart. Excuse me. It's a huge win. It's a huge win for Walmart. Just huge. And Amazon has no way to counter this unless they were to go out and buy a huge competitor like Target, right? Target has 1,800 stores. They could buy Target and turn them into Amazon stores, and then they'd be able to compete. But that's an amazing edge that Walmart has, because Walmart has physical stores, brick and mortar stores, and Amazon just doesn't have them. So the market realized this yesterday and pushed Walmart up to the breakout point, and it floated back down. And I wonder if it'll break out again today, because Walmart is having a big meeting this morning. They're announcing a lot of cool stuff. All right, let's get back to currencies. Well, euro. We talked about this one yesterday. Big move in euro today. We said it finally came to an area of support. Let me get rid of this indicator. You see, we drew a line down here on all these wicks, and we said euro had finally fallen to an area where we felt that buyers might step in. And look at the buyers stepping in big time today, as euro makes it all the way back to 118, currently just under 118. Right? Why? Look at there's just a huge amount of buyers back in August in the area just under 117. How do we know this? Look at all these wicks. Right? Every time it comes down below 117, the buyers appear. The buyers appear. And what happened here? It fell. Euro fell below 117 2 days ago, and the buyers appeared. Now, I didn't buy it yesterday. I was on here with you, and I was talking about how I'm not sure it's time to buy yet. I needed a little time to think about it, and I missed it. I was too late, but that's okay. It's okay to miss the trade. Missing the trade doesn't cost you anything. And heaven knows we've caught plenty of good trades. We caught this move down. So, if we miss, we can't catch it. We can't always catch every move in a 24-hour market. That's okay. And I don't feel bad about it. But that's something, we had our eye on it, and now it's gone, but that's okay. What are you going to do? You can't catch every move. But a nice move there after that formation of that hammer pattern and that wick, but mainly because all these other wicks formed, is what really made it interesting. And look, it bears watching. That's a lot of resistance ahead at this dotted line. 118.50. It's only 50 pips away or so now until resistance. So if I were long at this point, I would be using this as a preliminary target, this 118.50 area. I'd probably be taking partial profits at very least at 118.50. Look to take something off the table there. Okay. Because look at how this was support once, twice, 3 times in the past. 1, 2, 3 times in September. This area acted as support, so it could very well act as resistance now. That would not come as a big surprise. Hold on for one moment. Okay, and that's just a continuation from yesterday. What about the pound? Again, we were saying, listen, give the pound and the euro a little bit of time to settle down and find themselves here, because they were all over the place. And pound having a second good day here. After sinking down near 130, we're now getting up toward 132. A little bit of resistance here, in my opinion. Used to be support, now resistance. So it could have some interference here, just a little bit, and a little bit more under 134 here. That's why these lines are on the chart. This was a breakout from a symmetrical triangle. A very nice breakout, right? And that breakout is now over. But what a very fine breakout that did turn out to be. Get rid of these lines now. Once those lines are no longer valid, you want to get them out. You don't want to just have lines all over your chart. So this has been creeping steadily higher lows and higher highs all year long. We said over and over again that it was probably oversold on the whole Brexit issue, and that we felt that Brexit was not necessarily the end of the world for the British pound and for the UK. And of course, there always is maneuvering behind the scenes. You never know what's really going on behind the scenes, is one thing that's become very clear here. There's maneuvering behind the scenes as far as, will Brexit actually occur? There's always a possibility that it can be somehow undermined. So, and that could be part of the reason why this has been rising as well. Because again, the big drop is because of the passage of Brexit, and now you're getting into an area. When we hit 136, that was the highest we had been since the vote back in June of 2016. So this has been creeping higher, and the weak pound definitely I think probably gave a short-term boost to the UK economy, but it's really not that weak anymore. We were down in the low 120s now, it's the low 130s. Probably helped exports a little bit for a while there. Not sure that's really still the case. And there's euro pound. Again, I'm staying away from these. Much more likely to trade something like Aussie USD. Let's pull out our 10-day moving average. And we're seeing a rally here. We're not quite up to the moving average. There's your resistance area, and look where the moving average is, right at resistance. The price heading up toward it sure would be interesting if the price could get there. Excuse me. That would certainly make things interesting. It would certainly create an interesting entry scenario to sell short Aussie. So your entry for today is 78.20 according to the moving average. According to this this resistance level, depends how you draw it, it's right in the same vicinity. Excuse me. You can see they're right on top of each other. All right, resistance and the 10-day exponential. Pardon me, sorry about the coughing. It's terrible, I know. You can see they're right on top of each other, the 10-day exponential and the resistance level. They're within 5 pips of each other as we speak right now. So these are very, very close to each other. We saw that we were a little bit closer earlier and we pulled back. Again, the moving average currently 78.20. The high for the day 77.96. So it looks like we got within 25 pips of that moving average. Not far away at all. Could get there today. That would make it a fascinating place to sell short on Aussie as far as an entry point on the 10-day exponential moving average. That moving average continues to move lower. Again, just the fact that that moving average is moving lower, that's a sign that we're in a strong trend. Okay, we are in a trend. New Zealand also had been very weak, and some evidence here, right? Once, twice off of that 10-day moving average. So New Zealand dollar could also be shorted off of the 10-day moving average. We have several candles contacting that moving average and then the price dropping. I also have approximately 10 candles on one side of the moving average. That's another signal that the price is staying on one side of the moving average, and that's another signal that there's a strong trend. If you've got the price where the price is staying on one side of a 10-day moving average, that's a pretty strong signal that the price is pretty strong. And so Aussie USD or New Zealand USD, both of them, and the other one was Canada. Now the one thing is you shouldn't take all of these trades. Because if you take all of these trades, this one comes very close to an entry today. If you take all of these trades, then you've got one account that's very long the US dollar. And that makes you vulnerable, right? If the dollar has one bad day, then you could find yourself losing 3 trades. Aussie USD, New Zealand USD, and dollar Canada. You don't want to put yourself in that position, right? So that's where we have to be careful, right, and judicious. So here's a really nice trend in dollar Canada, and this one's very close to the moving average as we speak. The entry point currently is 124.84. The low of the day, 124.93. So that comes within 10 pips of the entry. It comes 9 pips away from the entry. Okay. And even as we speak, it's about 15 pips away from the entry point. So this one might be the closest to an actual entry. USD CAD. US dollar, Canadian dollar. And that's probably the most interesting. That might be the most interesting of the 3. That comes after a pretty long downtrend. So looking at this, whenever I see something like this, I'm wondering how much does this bounce up the other direction? start to think in terms of Fibonacci. Right, so if I buy this, right, how far will this go higher? Well, based on Fibonacci, it could go to 127.25. That's a nice move. If I'm buying it at 124.84, the 38.2 is 127.25. It's like 250 pips. Not insubstantial. Okay, about a 250 pip move. It's a pretty substantial move. If I can buy it there and catch a bounce of 250, I think I'm a pretty happy guy. Okay. I wouldn't expect it to happen in 1 or 2 days. It's just not the way this thing moves. I think it moves about 90 pips per day on average from high to low. And so it might take a week or two. I mean, you look at the pace that this has been moving, it would probably take at least a week to make it up to that Fibonacci retracement line at its current pace. But that is one way to look. One way to look at this is to say, well, where's that 38.2 now that the trend has changed? Dollar Canada has a tendency to form longer trends. I would say that's generally true of the commodity currency pairs, and not as true at all of currencies like the euro against the USD. You don't see those longer term trends. So I'm trying to use that to my advantage, the fact that certain currencies trend better than others. I don't have any data to back that up. That's strictly from observation, right? Simply something that I've observed over years is that commodity currencies tend to behave that way, and they trend well. Okay. So let's consider that this is like a commodity currency roundup, and I'd say any trades in here are going to be based on the underlying and dependent on the underlying commodities. So you do have a nice pop here in gold, right? But you don't have a huge reversal in dollar Canada. If I look at it, gold is still very much in a downward channel. It's simply at the upper end of that channel. Fair enough. So I'm not that worried about it. What about oil? Oil really looked like it was finally getting somewhere. And that fizzled out just barely above $50 a barrel today. You know, and that's just not enough to get, that's not really cutting it. But overall, you'd have to say it's been trending higher since mid-June. Higher highs and higher lows. It has turned around the downtrend, but all in all, it's still $50 a barrel. And it's been sideways really for over a year. It's been trading between 42 and $54 per barrel. West Texas Intermediate has for over a year. It really doesn't seem to be going anywhere. take a look at copper, which can be very important for Aussie. Copper looks a bit more bullish. I would have to say that this has a bullish look to it. Very nice uptrend. And cup. And a wee little handle, maybe. Not bad. Uptrend, cup and handle. Copper looks like it could go higher. That would be in Aussie's favor. We're currently pretty bearish on Aussie. The economic data out of China seems to say that whatever good things were going on in China seem to be fizzling out. Copper is the only thing that seems to disagree. If you look through the economic data on China, most of it has been, we went through a stretch where it was pretty positive, and then lately it's all turned kind of, I wouldn't say negative, but it's been really flat for the last 2 months or so, 2 or 3 months, and that's when the excitement is gone, and copper seems to be the only thing disagreeing with this. Copper did pull back. It's not as if copper is a rocket. Copper did pull back, but it looks like it wants to go higher. We'll see. Maybe copper knows something that the others don't. Or maybe it's just an anomaly. Okay. One last one to look at here. How about euro against Aussie? This could be on the verge of a breakout. This is what we would call maybe the past 6 months or so. Sort of a rounded bottom or saucer pattern. But this is creeping up ever so closely to a breakout point of 152. Excuse me. It's getting close. You can see 1, 2, 3 green candles in a row, and now maybe a fourth. And it's creeping closer to 152. If it can break 152, where does it go? Well, that's a very long-term consolidation. First of all, it's about over 6-month period of consolidation. If it can break through there, there's really not a lot of resistance up until I'd say about 156. That's 400 pips away. So there could be a big breakout coming in Euro Aussie. Okay, so that's something to keep an eye on as well. So Aussie in general looking like one of the weaker sisters out there right now in the world of currency trading. And that's really what it is, right? We look for matchups where we're trying to match up a strong currency against a weak currency, and that's what this game is all about. So that's going to wrap up this session. I hope you enjoyed it. Richard says, will we need a breakout and pullback? Euro Aussie. That's kind of my preferred way because sometimes breakouts can be fake outs. So I like breakouts, and then 152 should act as support. So I would like to see it break above 152 and maybe hold above 152 for a few days, and then try to buy it on a pullback to 152. That can work, right? That's kind of how I like to play it. So we'll keep an eye and see if that happens. So anyway, that's going to wrap it up for this session. But I'll be back for another session in less than 30 minutes, so please tune in. Until then, this is Ed Ponsi, your FX educator, saying thank you for listening. And I'll see you again in just 30 minutes.